And I know many traders are fascinated by euro dollar. I'm also fascinated. 27 countries, and I live here in Barcelona. And on one side and on the other side, the world's reserve currency, the most popular currency pair. But it's always choppy, lots of fake outs. I mean, technically, there's lots of information about euro dollar. Maybe it's a good currency pair to observe or trade with the demo account. But I think it's much harder to trade than a few of the others.
Welcome back everyone to the Amsterdam Down with Yohay Elam. We connected many years ago, like minimum 5 years that we spoke. Before COVID, before a lot of stuff, you were running your own website, Forex Crunch, which things kind of changed since then. Now you're working for FX Street as a senior analyst. So I want to hear like your thoughts about the markets and fundamentals and things. But please take a few minutes to introduce yourself, tell people what you do, and a little more about who you are.
Yeah, so I'm Yohay Elam. I used to be a computer programmer. I used to be a retail trader, and I founded Forex Crunch back in 2008 as an independent blog that turned into a fully fledged website. Then I moved to FX Street in 2018, so that's already 4 years, one of the largest Forex portals. And now I'm leading the premium content offering there. And yeah, I guess I took advantage of the boom in markets in 2021 to sell Forex Crunch and pass it on. So yeah, senior financial analyst, helping traders, doing a lot around content and the Forex markets.
I know what I like about you is that you had a really nice touch on like fundamentals, and you were able to like explain it in a way where everyone could pretty much understand fundamentals, which was I think pretty cool. I think we need that because like fundamentals can be very tough, like very complex, but you had a good way to explain that. So I kind of want to hear like what do you look at these days in the market? What are some things, some assets to kind of analyze or just look at in general?
Now we're having new volatility, which is great fun. One of the main reasons is inflation. Central banks are finally acknowledging inflation. Finally, there is inflation. When I began, when we both began, I mean, central banks were sort of looking for fighting deflation. Prices were not rising, and suddenly, instead of printing more money and lowering interest rates, the opposite is happening. So the opposite of printing money is happening: less money, more scarcity, more liquidity holes, more volatility. I see it as providing traders with opportunities to trade. I think Forex is making a comeback, especially now when this lack of money is causing and fear of higher interest rates is causing stocks to fall. I think so. I'm looking at fundamentals looking forward is the differences between interest rates of different central banks, and every change to these expectations makes a difference in currencies, and yeah, moves are a bit more aggressive than they used to be.
Interesting. I want to kind of hit you with this straight off the bat. So a lot of people are going to say, well, fundamentals don't matter because we had COVID, the market didn't crash, and now we have like pretty much nothing except the war, but the market crashes. So how do we kind of deal with that? How do we know whether fundamentals work or not? And what's your kind of view on that?
Well, for those trading only on technicals, it's okay. I just want to ask you guys one thing. Just look at the hour of the publication of major economic indicators. That usually triggers volatility. Of course, not always in the sort of correct direction, but it's something that even pure techies should just be aware of. Regarding COVID, we did see a lot of action. We did see markets crash and then make a huge comeback. I think the main reason for everything that's happening is policy of central banks. The big comeback in stocks was fueled by massive money printing by the Federal Reserve and other central banks, also by governments. So I do think central banks matter, and I think that economic indicators which change expectations for what central banks do matter. There is a change. Inflation now matters more than non-farm payrolls. So not every economic indicator that was that important 5 years ago, 2 years ago, before COVID is important right now in the same level. But fundamentals do matter. There's a difference between top rate of 3.5% in the US and 2.5%. And if the Bank of England is worried about inflation already choking the economy and doesn't want to raise interest rates, the pound falls. And I can go on and on with examples, but We've seen reactions to recent releases of economic figures that they do move markets, they do trigger volatility.
So, what would that mean for the forex market? What are some pairs that will move more than others? In what kind of direction?
Yeah, I see. I mentioned pound dollar, so that's an example for me of a very volatile pair. Sometimes it's the pound is seen as an emerging market currency, which is maybe not the best description. But I see there a difference. Both central banks are raising rates, but the Bank of England is set to stop, and I think we've seen some of the pound dollar fall, but we'll see a bit more. I also think that the Australian dollar could be a bit undervalued at the moment. It's suffering because of China's COVID policies, but I think that China will eventually have to move away from zero COVID and sort of push for more economic growth because they need people to thrive, and that could boost the Australian dollar. In general, I think it's also a nice pair to trade. Technically, it respects uh, support and resistance levels better than other pairs. And I know many traders are fascinated by euro dollar. I'm also fascinated. 27 countries, and I live here in Barcelona. And on one side and on the other side, the world's reserve currency, the most popular currency pair, but it's always choppy, lots of fake outs. I mean, technically, there's lots of information about euro dollar. Maybe it's a good currency pair to observe or trade with the demo account, but I think it's much harder to trade than a few of the others.
Yeah, I have to agree with you on that. The fact that, like, in pretty much all the books, all the things you just look at online, you talk about, yeah, your dollar being the pair to focus on, but it's a lot tougher to trade these days. Maybe like a couple years ago it was different, but these days it's definitely tougher to trade. Personally, I don't like it. I don't trade it that much at all. I think there's a difference that needs to be made between day trading fundamentals and then like trading over a long term period with fundamentals. Like, what are some things you look at on different cases, and how do they matter?
Yeah, and if you're trading intraday, you just have to understand the mood in the same day. I mean, now we're in stocks in the bear market, at least Nasdaq, S&P not there just yet. We're seeing general trend of the dollar is to the upside, but if you're trading on a daily basis, you have lots of days that you see movement. It could be violent movement. I mean, price action to the other direction. So I think that's the main difference. If you're trading for a long term, you know you can zoom out. The trend is easier to spot on a daily chart, on a weekly chart. But if you're trading on a daily basis, you need to catch up with the news of the day to see where the wind is blowing. If I mentioned China, you're based in Asia. If China, in this case, removed or some of the restrictions in Shanghai, then we get a day that is counter to the trend. It's good news. It's adverse for the US dollar, and that's the trade for the same day, and that's the opposite of the general trend. So that for me is the difference.
How would this look like for a trader, let's say, who wants to trade, or at least wants to understand these news, these events coming up? You gotta always be like catching or reading websites to find out what the news are, right? Because it's really tough to like know when something happens, like right in the moment, and then trade that. How do you kind of stay aware of all these news that are coming up?
Yeah, well, first of all, I use the economic calendar as fundamentals. Again, once at least you need to know when the events are released to be able to know when to expect at least more movement. Perhaps not exactly in the direction you want it to happen. And another thing is my own website. I mean, the website I work for, FX we publish a daily article called Forex Today. I'm sure our competition also has these kind of articles which give you the guidance to the general themes in markets, the general market mood, what's sort of the talk of the day. So I think that's something every trader should do with his morning coffee or whatever you drink first thing in the morning. So that's to get the bigger picture for the day before entering a new trade.
Yeah, and that's very cool. I think it's a good way to have like news that are not biased, like not like focusing on just one aspect, but covering like everything that's happening. And I think that that's a really good thing. So like too many websites, especially in forex, kind of show their interpretation of the thing, but without really kind of showing what's really happening out there. So That's a really good thing to have, of course. So I really appreciate that. I know we discussed this a while back, but what's some resource, or where can someone go to learn fundamentals? Let's say someone wants to, or they trade not technicals, they want to add fundamentals to their arsenal. Where should they go to learn that stuff?
Yeah, one of the best websites, which is Baby Pips. I think they provide good information for understanding fundamentals, understanding technicals as well. So that gives you a good foundation. I prepared a webinar that I repeated several times already about trading the news, 5 things you need to know. So that's, I think, something like half an hour of a webinar. So yeah, again, I'm promoting my own thing. And there are lots of books and lots of information indeed. I think that understanding the basics of expectations, not the actual, what markets are pricing in, that's the basic of trading fundamentals. So if markets already move towards one direction ahead of an economic event, an economic release, then there's the good chance of what's called buy the rumor, sell the fact. I think that's one of the most important things you should know when trading the news, that even if the figure came out a bit better than expected, but the currency was already rising beforehand, then it's going to go down. It's going to be counterintuitive. So I think that's the best sort of short tip I can give, apart from pointing your viewers, listeners to these resources.
Awesome. Yeah, we'll make sure to link that in the show notes of the podcast and the YouTube description below, of course. I know you have some good stuff there for sure, so that's awesome. Yeah, I think you mentioned a good point. Expectations is something that people don't think about. They look at like just the number of the news or something, and that's something that can make a big difference, of course, in your trading, your results for sure.
Sometimes markets act like goalkeepers in a European football. In a soccer match, they pick a direction. They bet on one direction. It can be right, it can be wrong. But they move ahead of time.
Have you had a look at cryptos in the past? Is it something you look at, you analyze yourself, or not that much?
No, I mean, I'm not a big fan. I still haven't seen. Bitcoin is here for already 12, 13 years. And I think blockchain is a great technology. It can be used for logistics, for other stuff, but I don't see what value the cryptocurrency itself has, what problem it solves. We already have digital transactions, which are faster. I don't see any wide adoption. So if you look at a startup that has to make money after 12, 13 years, if it doesn't get wide adoption, I don't see the use. For me, I mean, only good thing only good reason to buy Bitcoin or any other cryptocurrencies is to expect it to continue rising. I mean, pure speculation. If somebody else buys it at a higher price, go ahead, buy it. You can make a very decent profit. And there have been, and sure, I feel that I was personally left out because I was always skeptical. There were many good years which I could have made huge profits. People were talking to me about cryptos in the early days, and of course I'm jealous about that. But there's no, I mean, as somebody focusing on fundamentals, I've yet to see some kind of value in cryptocurrencies.
But that's true. Like you cannot really argue on the fact that what crypto is supposed to be is not really the case now. It's more like a speculation thing, but it's nothing that was supposed to be like how it's supposed to be. Basically, it's different.
Yeah, it has a life of its own and not necessarily successful. Yeah.
With that being said, like what would you recommend traders to focus on now? Are there some, like we mentioned you could follow strategy before, but are there some things that people should focus on more than others now? Like the stock market crashing. Is this what people should trade now, or is it more like in Forex or something else?
I think Forex is the most fascinating thing at the moment. We're seeing currencies move. Stock markets, you need to be a bit more picky. Some stocks are doing better than others. Tech stocks are falling because of extremely high expectations. But some of them are good businesses. So you really, if you want to trade stocks, I think you need to dive a bit more into each stock. I think macroeconomics is a bit easier to understand in that sense. What I see is the dollar continuing to rise until we see some signs of peak inflation, until markets say, now we can see the peak behind us. There's the fog of uncertainty is gone, and then I think we'll see a massive dollar sell-off going on for months. But we're not seeing the peak yet. There's still fog, and when there's fog, when there's uncertainty, the dollar as safe haven rises. I think Japanese yen had terrible crash, totally justified at the time. The Bank of Japan is the only central bank that isn't tightening. That well, there isn't inflation in Japan, but I think the trade is went over the top, and the yen still benefits from safe haven flows, especially when things are not going so great in Asia as in China. So I see these currencies as continuing to rise in the short term, and yeah, Canadian dollar benefiting from U.S. growth. It's for me the Canadian dollar is more of a it's more dependent on U.S. Growth than on oil. It's seen always as a commodity currency. I think Kiwi dollar has been punished too much as a risk currency because of all this negative market moods, but New Zealand's main export is dairy products, is agriculture. Because of the Russia's war in Ukraine, we're seeing prices of food rising. Both countries, Russia and Ukraine, are big exporters, so Russia is untouchable, Ukraine is unreachable. So I think New Zealand can benefit from it once the market mood calms down a bit. So I think there are many opportunities on a fundamental level, and the trades, the ranges are larger than they used to be. I think we've been in markets for quite a long time to express our frustration about not only euro dollar but also other currencies. Euro dollar was one of the most frustrating ones during several years, right?
Of course. Now, this might sound like a newbie question, but why is it that Japanese yen is going down? So you use GPY going up. But we have the war, we have things that are really uncertain in the market. Why is it that it's still going against what it's supposed to do, basically?
The war a bit, and we're seeing reactions. I mean, we've seen in recent months, were a bit similar to COVID, where there's a rush to cash, and the US dollar is the king of cash, so it turned into the number one safe haven. That means that's one reason why the dollar beat the yen. Another reason is monetary policy divergence. The Federal Reserve stopped printing money, began raising rates, and is now signaling a higher pace of raising rates. Inflation is high in the US, especially core inflation. That's for me the main difference between the US and let's say Europe or the UK, where core inflation in the US, it means prices excluding oil, energy in general, and food are rising fast. Just US economy is doing great. It's overheating. In Japan, um, there hasn't been that much of inflation. I remember one case where the company behind Kikkoman, the famous soy sauce, they decided to raise rates by 4%. Nothing shocking here, nor in the US. There was a huge outcry in Japan. Prices are not rising there as much, and the Bank of Japan, returning to monetary policy divergence, said that they will continue with their policy of keeping long-term yields and 10-year treasuries, Japanese treasuries, at low levels. It means that while other central banks were, especially the Federal Reserve, withdrawing money from markets, raising interest rates, the Bank of Japan kept on printing money. Printing money means devaluation of the currency. I think that has reached its limit. Dollar yen, in my opinion, has reached its peak for now, and from here there can be too much of a good thing. A weak Japanese yen means eventually inflation rises in Japan, and also Japanese yen is a safe haven. Circling back to the first point, it works better when there's trouble in Asia. In this case, China's COVID policies, lockdowns, which cause less production and less consumption. And also, we've seen it when U.S. President was Donald Trump, and there were theme of trade wars was prominent in markets. That's when the Japanese yen gained more ground. When there are more doubts about growth in Asia, Japan and China are linked together. politically very different, aligned differently, but economically very close together. So I think when there's repatriation from Asia to Japan, that's when the Japanese yen rises, and I think we're seeing it right now. So that's sort of the full answer.
So what you're saying is basically the COVID restrictions in China could make the Japanese yen go up in the future if they get worse, basically.
I think it stopped the bleeding of the Japanese yen. At some point, I predict that China will have to change its policies, and employment is going up in China a bit more than expected. So that might cause a change, but in general, you can't have either Jap- Bank of Japan can't have uh, a weak yen for a long time, and but also inflation to remain low. At some point, they'll either have to tighten their monetary policy or have a stronger yen. So I mean, for me, it's a win-win case for the Japanese yen in terms. I mean, from this point, from this very low point for the Japanese yen, it's I think 20-year low for the yen against the dollar. So I mean, around the current levels.
I was looking at the chart earlier today. It's quite scary to see the USD Japanese yen so high in that case. So yeah, and that kind of shows the importance of maybe not like looking at the news or like considering all the news in your trading, but at least being aware of the like bigger picture of things and kind of like how things are moving overall in the economy. I don't think people need to like follow all the news and details and be aware of everything, but at least a big picture of things so that they can make better decisions on their trades. And especially if it's going to be a little bit more than like day trading, like a little bit long term.
Exactly.
Awesome. So, Yohei, what can people find you if they want to connect with you or reach out after the interview?
You're welcome to follow me on Twitter. It's at Forex Crunch. I kept on to that handle. Let's see what happens with Twitter, but with all this saga around Elon Musk, it's fascinating. But you can find me there. You can also follow my work at FX Street, and of course, another small pitch. Join our premium service. You can connect with me directly, more frequent basis, and me and my colleagues we respond to questions from users. And yeah, you can also drop me a line. We'll leave just give you my email address. It's my name, Yohay, dot forex, Forex, at gmail.com for any other inquiries.
And you're helping traders also a lot. You mentioned before we went on live that you are helping traders on a more personalized basis to kind of understand fundamentals better and how trading works. So that's really cool. People can definitely reach out to you for that. That'll be awesome. I'll actually put a link below, like you mentioned, for the FX Street newsletter where they get daily news. That would be pretty cool to give people. And yeah, I think people can get a lot for that. I think we discussed a lot of fundamentals. So people who are not used to it might be a little bit overwhelming here, but if you're used to it more and you understand, you can take some time to learn this stuff more and reach out to, of course, Yohei to get more into that. So I really appreciate the help you put out for traders, Yohei.
Thank you very much, and glad we're both in the business of helping traders become more successful at doing things a bit more personalized. I think we can all learn on our own. We can all learn in the course, but sometimes we need specific guidance, more personalized. And I'm very glad to have the chance to talk to you and been seeing your great work. Keep on the great work.
Thank you. Awesome. So thank you for your time, Yohei. I appreciate it. And I hope we can catch up pretty soon.